Hey folks, welcome to the channel. In today's video, we're going to be doing an entire portfolio update across all of my accounts. If you've been following the channel for a while, you'll know that the main focus of my channel is to highlight me building my TFSA from day one all the way to maxing that account out, with the goal of my channel being to help other beginners get started with their investing journey. Now, I had this realization recently that I have other accounts that play a part in how I develop my asset allocation in my TFSA, and felt it would be important to share certain aspects of these other accounts. And so I went ahead and said that I would promise I would do monthly updates on all of these accounts. Now, it's important to stick around to the end because there's two big updates that I made to these accounts. So don't jump out of the video too early, stick around to the end. So without further ado, let's jump right into the video. My name's Darren. This is the Crazy Canuck Investor, where I try to make investing a little bit easier for beginners, because let's face it, there's nothing that gets you ready for that first day of your investing journey. And I do it by sharing my journey with all the ups and downs along the way. Now, in today's video, we're going to be using a investing app that helps track all of your portfolios and bring them together in one place. That's Passive. Now, if you've never heard of Passive, there is a website you can go to, and Passive has a free account. But if you're a Questrade user, you get the annual subscription, which is $99 with all of the great parts of it for free if you're a Questrade user. Now, I love this platform because it brings everything together in one place, in one picture at one time. And so today we're going to use it to walk through most of the things that I'm going to talk about today. So here we are on the main screen, and you can start off by looking at the dashboard at the top. And by the way, if you are interested in using Passive, I did make a video about it, and you can go there and check it out in more detail where I talk about it. Fantastic tool. So back to what we have here on our main dashboard. So on the main dashboard, you can customize it, which I have done. And I've set it up so that there's the most relevant things that I think I need to look at. So the first thing we're going to look at is the last 12 months of contributions. That's how much money that you've taken from your bank account and deposited in, and then gone ahead and invested. Now, recently, and this is one of the only shortcomings that I found about Passive, is that for some reason it's not tracking all of my deposits. Now, I did make a big change recently where my wife and I are switching from a big bank over to using Wealthsimple. And if you're not familiar with Wealthsimple because you're new to the investing world, I have lots of videos. Go into my playlist and check out all of that stuff so that you can learn about Wealthsimple. And there is a link in the video description below that you can use in order to get yourself started. It will even allow you to get some money in your account to get you started investing, because you can start investing with as little as $1. Now, this shortcoming of Passive, I can't really explain what's causing it. I did reach out to Passive. I had a ticket opened up in order for them to explore what the issue is here. Basically, what I think is going on is, for some reason, the program doesn't recognize when I transfer money from my cash account with Wealthsimple into my tax-free savings account or any other account that I might be putting money into. Now, there are contributions that exist here, and those ones are going into my Questrade account, which we'll talk about a little bit later. Okay, so the entire account is currently sitting, as of filming right now, at $257,889. Now, this is a great tool because you can track as you go along where things were at certain dates leading up to today. Now, the markets have been really strong lately. If we look back here in October of 2023, we can see we were kind of at the bottom of things as far as my account goes. And I would suggest that's probably reflective of the markets as well. And you can see that we've had this great growth over, say, since October till now, which is June of 2024. But of course, we can see that there's little dips along the way as we go. And right now we're into one of those dips. We kind of reached a peak. This is what long-term investing looks like. You have to ride these ups and downs out in order to, gain from keeping your money in. For instance, if you sold in one of these dips, then you might miss out with one of these peaks where stocks are going up in value. So again, the entire portfolio, $257,889. Now, there's a refresh button down at the bottom here. I'll just tap it. We are in the middle of the day. Okay, so this is updating across all of my accounts. And you can see on the one side of the screen all the different accounts that I have. And there we go. So we're at $257,857. Okay, now I've set a retirement date for myself. Of course, for some of you that are a lot younger, this will be considerably longer than mine. I'm set to retire in about 9 years, as you can see by the date here in 2034. That's not a hard date. It's a fairly loose date, but it is a date that I use to set goals for our investing as we move along. And you can see by the goal that I've set, now the target is only $500,000, and let me briefly explain why. I have a pension and my wife does not. So this is how we're going to supplement the two. My pension income will be supplemented by this money that essentially will be able to draw down at the time both my wife and wife and I retire. So right now we're 52% of the way there. And of course, that will continue to change as the accounts grow and we continue to make our regular contributions to these accounts. Now, one thing I do want to point out, if you're new to investing, it's really, really important that you get a few things out of the way before you start investing. Number one, you want to make sure you pay off any high interest debt. These are things like high interest loans. Maybe you went and bought a car, or maybe you're financing some furniture or things like that. There's absolutely no sense in investing money if you have high interest debt. So make sure you pay off that high interest debt. The second thing is you want to set up a brokerage account. In my case, I use Wealthsimple and Questrade. That's important. And then, of course, the last thing is that you want to make sure that you're making regular contributions. It could be as little as $1 a week or whatever your top end of your budget. I use the ratio of 20% to invest, 30% to save, and the remainder then 50% is for your regular spending, and that's where a budget comes in handy. So you probably want to establish a budget. All right. So let's look at each account and we'll talk about each account going through each one of them. So the first account is going to be my spousal account. In fact, it's actually my wife's. So what this account is, I set it up so I make the contributions from my salary, and that's because I make a little bit more money than my wife does, and she doesn't have a pension. So what I'm doing is effectively I'm taking my salary for the investable amount that I want to put in there to reduce my tax bracket. So I put it into the spousal account. And then she will draw down that money. That money becomes hers, but I get the tax credit in the current tax year. So if you are in the same situation as me, you may want to consider that. Now, I'm holding this particular account with Questrade right now. And the reason for that is because Wealthsimple does not allow for DIY, or in other words, you doing your own investing. They only allow spousals to be robo accounts. And right now, I don't want to pay the extra fees to have them manage an account that I think that I can manage. So therefore, I'm keeping it at Questrade for now. Now, if they were to change that, I would definitely take the account and move it over, because the vast majority of our accounts, including our banking and our other investing accounts, are all sitting with Wealthsimple. Now, so this account, the way that these are set up is that on the one side, we're looking at the accuracy. So what I did is I went ahead and I set up an asset allocation. What does that mean? Well, I did a video on it. It's in the playlist, but essentially what we're talking about here is that we set up how much of each security we want to invest in. So starting at the very top, we're looking at VOO, V-O-O, and what does that invest in? It's the S&P 500. Now, depending on what kind of account you're using, for tax efficiency, you want to invest in different types of ETFs. The majority of my investing is in ETFs, or exchange traded funds. I do have some single stock holdings that I originally invested in when I first started investing, but I'm no pro at this, and I don't have enough knowledge right now in order to pick single stocks that I know will go up in price and make big bucks on. So instead, I take the passive approach and invest in low-cost exchange traded funds. And in this particular account, I've set up a number of asset allocations to give me broad exposure. Now, what does that mean? It just means that I'm putting money in various parts of the world and various parts of the market in order to make sure that our account is growing. So the very top one with VU, just to give you an idea of what asset allocation is, right now the blue dot shows the target that I set, which is 30%. And then under the green dot is the actual. So we only have 28.4% of the total 30%. And then you can see there's a blue line. It indicates where the green will meet the blue, meaning that they would be meet that target. So it's a visual aid in order to remind you where you need to put your money. Now, one of the great things about passive is that you can set it up to do trades for you. I don't have that set up right now, but what I do have it set up to do is to tell me when I put money into each account to tell me which securities I should be putting that money into. It basically takes the amount you have and divides it out, telling you should invest in certain positions. And it's all based on your asset allocation. So if you've met your asset allocation, it won't recommend that you put your money in there. Now we can see that I have a little bit of cash in there. In Canadian funds, I have $20, and in US funds, I have $9. And you're probably wondering, well, wait a minute, Darren, aren't there some stocks in there that perhaps you could invest that money in? So two things with Questrade, you can't do fractional investing. In other words, I can't buy just a part of a share. And the other thing is that each of these securities, if my asset allocation is met, it won't make the recommendation even though money may be there. And of course, the last thing is that the price of the stock obviously is not meeting the amount. So for instance, I don't have a stock that's under $9 that in US that it would tell me to invest in. And then the same is true with the Canadian funds. I don't have a stock that's under $20. Everything is well over $20. As well as I also have met the target allocation, so therefore it's not going to make that suggestion. So you can see here as we scroll down that there's some targets that are well off, IEMG. That's emerging markets. This is relatively new that I've introduced into my accounts, and so we're slowly building that up. Currently, I only have 3.6% of the 16% that I allocated for it. Now, I do have an all-in-one fund in here, XEQT. This is also relatively new for me. I figured that I wanted to try all-in-one, but I also want to keep my options open to these individual ETFs that can give me some broad exposure. And I kind of want to test this theory out to see which one may perform better, say, over the next year. Scrolling down, then the other big ones that we're trying to achieve right now to build up the asset allocation is AVUV, which is small cap in the US, and AVDV, which is international small cap. Those ones are still small at 2% of the 6 that I need for AVDV and 3.2% of the 10% that I've allocated in this portfolio. Now, the one thing I'll point out about this account is it is the spousal account. So I got my tax return this year and I took my tax return and I've slowly been investing that into this account. And so what will happen is every year we'll just take that tax return, we'll keep rolling it over into the spousal account to help build this account up for my wife. Okay, so let's jump over to the TFSA. My current TFSA holdings are $28,256. Again, this is what I highlight on my channel. If you decide to start following me after you watch this video, all of my videos that I put out highlight this. And the other thing that I do within my videos is I usually talk about one other subject to provide some information. Most of this is stuff that I've either learned over the last year or the time that I've been investing, or it's something new that I've learned and I think it's important to share. So I won't talk much about this tax-free savings account because it is in all of my other videos. Check out my playlist, you'll see all the other videos, and watch for the upcoming video. Tomorrow is my trading day when I do my bi-weekly investments, and then the video will be coming out next week after I edit it. So let's jump over to my RRSP. Now my RRSP is also on my channel. This account I don't make any contributions to for a few reasons, but we'll talk about those when I talk about my TFSA investments on the other videos that I put out. So currently that account is sitting at $16,900. One thing to note is the TFSA and RRSP. My asset allocation is split between those two, taking into account the different funds that I'm holding within both for my asset allocation for efficiency when it comes to withholding taxes on dividends and so on and so forth. All right, jumping down to my kids. So we have two kids. Right now they're 9 and 11. And when I started investing really late in life, for those of you that you don't know, I started investing at the age of 50. I wish I had done it a lot earlier. Sadly, I did not. But I want to teach my kids. I want them to start as early as they can. I know that some of the viewers that are watching this channel are young and you have such a big time horizon. Letting compounding work for yourself. So I got my kids started investing right away. Now this account is technically my wife's TFSA, but the intention here is to get accounts in their names that would be in trust. We're not there yet, but we're working towards that. So this account is holding $1,272. And it's very simple. There's not a lot to this account simply because it's small. It's somewhat broad in what we're investing in. So we have ZSP, which is the S&P 500. It's a BMO product, similar to VFV or VU that I showed you in the last account. I am putting XEQT, the all-in-one, into this account. And then XEI, this is a high dividend ETF. This is a monthly payer. Probably when I started the account, it was initially started for my wife and I. But for my kids' purposes, because the time horizon is so big, XEI might not be the best choice. I haven't really decided. A product like XIC might be, but we may make that change. That's the beauty of using Wealthsimple, where this account is held. We can make changes and there's no cost to doing any of that trading. The other one we hold in here is Plaza REIT. It's a commercial real estate REIT that has holdings in mostly in Eastern Canada, but it has a fairly high payout based for its yield based on the stock price and so on and so forth. So it was an easy one to invest in. And I have a feeling that with interest rates, in fact, tomorrow the Bank of Canada will be making an announcement about interest rates. It's very plausible that there could be a drop, although I'm very skeptical on that. But when that does start to happen, I would suggest that some of these REITs could benefit from the reduction on interest rates when it comes to the mortgages that they're currently holding, because right now we're at all-time highs. We do have a covered call in here of HYLD. It is an incredibly small holding within here. As you can see, that, and if you haven't noticed, I've basically meeting all the asset allocations. I've set this one up, and the way that we make, one more thing. The last stock that's in here is Manulife. So we have all-in-one, we have a covered call, we have a REIT, we have a single ETF for the S&P 500, and then we're holding one stock. And this is literally 1 and a bit shares right now. I also wanted to demonstrate to you folks that you don't need very much to do investing when it comes to starting your investing journey. Don't be thinking like I need to be investing hundreds of dollars. The way we set this account up is going all the way back, and I may consider doing some short videos on this to demonstrate what we did. But basically, I started off two things, and I made a short video about this. One thing is, you guys have pop bottles. Your pop bottles most likely get chucked in your recycling, and away they go. But you can actually benefit from that. So I taught my kids to help me make returns on the pop bottles, and then we take that money and we throw it in this account. The other thing that I do is every Monday, I invest money in this account. And it originally started off with a really small amount, and every month I add $1. So this month it's $19. Next month it'll be $20 every Monday. And the idea here is that over time, as you make more money, you would then, remember I said 20, 30, and 50%. So 20% investing is going to increase as you make more money. And I wanted to replicate that. So that's what this account is doing. And as you can see, we're accurate to 98% based on the asset allocation that we've set up. All right, jumping down into my wife's RRSP. So This account is at 73% accuracy. It's fairly low because I just changed the asset allocation within the last few months as I learned about asset allocation. This account's currently holding $141,269. Now, this one is not getting any contributions to it. Remember, we talked about it. My spousal is the one that we're making contributions to. I get the tax credit on the spousal. My wife takes that money out later in life, and that becomes her money. Now, this was set up. She had money in mutual funds, and after I did research and realized mutual funds are creating a lot of fees that we don't need to pay, I took that money out and then I placed it in Wealthsimple, and I've created an account, started investing in it. Essentially, initially, it was based on what little information I knew. And remember what I said in my intro, there's nothing that gets you ready for the first day you're investing. A lot of you will go to school, prep yourself with years of university, and investing, you basically don't get any of that. And so you sometimes take the shotgun approach. Well, I have to admit that I did do that in the beginning, but I'm now trying to streamline these accounts to be more ETF oriented with a few single stock positions. These are positions that I think are really important. So here we are. I made two big changes to this particular account. So I held single stock positions in this account, and one of them was Royal Bank, and the other one was a diversified international ETF, VIU. Now, I have some crossover in some of the accounts, and I also am building up a similar ETF to VIU in the other accounts that we have. Remember, I said that my asset allocation is based on across all of the accounts when I set them up. So there's no point in doubling up on some of these. So I sold off all my VIU position, or in this case, my wife's, and I also sold off Royal Bank. I held quite a number of shares of Royal Bank, and I have exposure in other things within the accounts. XEI is one, and XIC are two ETFs right now that give me exposure to Royal Bank. And so I felt there's no point in holding a single stock position in there. So what I did is I took both of those, totaling, as you can see on the screen, it was about just about $2,600. Then I converted that money back over to US funds, and took that money, and then based on the asset allocation we can see here, I invested that money into AVUV and AVDV. Now, the reason that I did this is the S&P 500 is performing amazingly. This is the type of investment that a lot of people will gear themselves to. If you're on YouTube, you'll see some people, they're consistently investing in the S&P 500 every single week. Not a bad investment. It grows a lot and it performs really well. But here's the question is, Apple recently took a bit of a tumble. What's the reason? Big companies can only show massive growth or have massive growth for undetermined periods of time. Now, the S&P 500 encompasses some of these companies like Apple, but it did take a tumble. Now, there are companies that were Apple many, many years ago, and they would have started from essentially nothing, growing into something great. Well, for me, those types of companies exist in AVUV and AVDV, both US-based and international-based. So I have North America exposure and I have international exposure. Who knows when one of the companies in those particular ETFs will become the next big growth company. Now you can see the asset allocation is small, only 10 and 6%, but it helps, like we said, we want to broad diversify. So that's where we put our money. And we're growing at 73%. We will slowly grow that. Now there are going to be some other positions in here that I will likely change. As you can see, I'm very heavily overweighted on HYLD as a covered call. I did that initially thinking, oh, we need monthly income to be produced. But I think the reality is that still now, with 9 years to go, that monthly covered calls might not be the best for a huge asset allocation. I'm thinking more like 1 to 2%, and then taking the rest of that money and investing it into some of these other ETFs so that we can get a bit more accurate. And then as the dividends come in, we'll reinvest those, which is also something I should point out. Many of these accounts I have set up on drip. What is a drip? It just simply means when I get a dividend that comes back to me, I then take that money, the program automatically reinvests it back into that particular security, and it continues to grow, and then you're compounding. Over time, it just continues to grow. Now, this particular account is the one that has the most positions in it, and over time, I will definitely be reducing these, but these things take some time. I don't want to take a loss on positions, and so I have to be careful about when I sell them. There's no point in taking a huge loss if it's not completely necessary. So there you go. So oh, and one other account that I do have in here, I guess that I should just briefly mention because it might pop up, is I have my non-registered account. A non-registered account, I was doing a bit of a test. I wanted to see if I could harvest dividends with covered calls. What does I mean by that? Essentially, invest into the covered call before the ex-dividend date, wait till it passes the ex-dividend date, then sell that covered call, and then purchase another, continuing that process so that you get the returns on the stock, hopefully watching it grow. Sadly, this didn't work out very well, as well as I'm doing it in my non-registered account, which does have tax implications and withholding tax on the dividends. And I've decided it was a complete flop. I was gonna do a video series on it, but at the end of the day, I realized it's a complete flop right now. I have so much room in the TFSA and RRSPs, there's absolutely zero reason to be doing that. And so once the dividends are paid out this month, I'll probably be selling those stocks off and putting that money back into some of the other accounts. So back to what we were talking about initially, is that this account is growing. These are all of my accounts. And so like I said, on a monthly basis, I will definitely do an update to show you where these things are sitting as we move forward. And as the dividends roll in, these accounts will continue to grow. Like I said, most of them are on drip, so it's automatic. I don't need to do very much about it. Okay, now for the part that most people are incredibly interested in, which is the dividends. How much have we earned in dividends? Especially for a portfolio of this size, if you're new, this will give you a general idea of when you're purchasing what I'm buying, what kind of dividends you'd be earning on a monthly basis. And that might be important to know down the road when you retire, not necessarily when you're younger, although there are some people that may have to rely on some of this income and maybe they want to live off those dividends now as opposed to when you retire. So we can see that it dates back to April of 2023. That is when I started. And you can see that we've made some regular contributions all the way forward to now. In general, we're making 11% return according to Passive. The investment has grown $27,000 since April of 2023. Keep in mind, this is all of the accounts. If you want to check out how the performance is of my TFSA and my RRSP, you can check out the videos that I put out twice a month. It's telling us here that we're making an average of $528 a month in dividends. Now, this is not completely accurate. This is one other small hiccup that I've noticed, and I'm not too sure, again, what the deal is, but I moved my wife's account from Questrade over to from Questrade over to Wealthsimple a few months ago. And I think that's what's created the hiccup. This chart here will show us the history. So there is some nice growth I have made. You can see the recent changes. So you can see that the dividends are kind of dropping off a bit. That's because some of the ETFs I'm investing in only pay out every 6 months, where previously I was a little more weighted on monthly dividend producers. So you can see if you're adjusting from monthly dividends to maybe quarterly or every half year, that it will affect how much dividends you're seeing come back into your account. Now I'm reinvesting all of that. So according to Passive, we made $7,674 in dividends. Now I know that's not correct because I've been tracking my dividends right from day one all my own using this spreadsheet here. You can see that in the first year I made $6,983, and it's broken down by the various accounts that I hold. And then this year we've made $5,125, and when you total those together, it's $12,109 in dividends up till today, so year to date. Now, if we look at the totals on a monthly basis, we're earning roughly, the bottom looks like in this year, $700. Keeping in mind that every quarter some of these dividends are paying out, not every month, so there's going to be fluctuations. So it looks like we're slowly growing. We're making on average just above $700 a month, and that will continue to grow as I add more positions. So there you go. So we're making total, we made $12,109, and we're making on average every month $709 in dividends. So you've made it this far into the video. Thanks very much for watching. A couple of things to consider is if you really want to support my channel, obviously giving it a thumbs up is really good. Making a comment telling me all about your investing journey, or perhaps some of the things that I might be helping you with, would be fantastic. I always respond to those. As well as don't forget to subscribe, and it also shares. If you know some other beginners out there that might benefit from watching my channel, give it a share. Make sure you subscribe, because definitely a lot of people are not subscribed. Appreciate you watching. Now, one last thing is, if you want to support the channel, I do have in the video description below a link to buy me a coffee. It does take time to edit the videos and prepare them for everybody to watch. So if you're interested in supporting the channel, check out the video links in the description below. And lastly, if you want to get started with trading, I have lots of links. One in particular is for Wealth Simple. I'll put it up here on the screen. If you are brand new and you want to get started with Wealth Simple, the process is super easy to get started online. Download the app and get started. In fact, I think I'll probably start doing a video series on that as well. But if you use the video link below, or the description link below for Wealth Simple, you will get money in your account and you can start trading right away. The last thing is, I am on Blossom Social. Blossom Social is a great place for any investor to learn information. They have lots of great stuff over there. You can see my portfolio live as I'm making trades. You can talk with other investors, and you can use their Learn section in order to benefit from your investing journey. Thanks again for watching the video, and we'll hope to see you in the next one.